Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending January 24th, 2025. So the title of the review this week is Trump 2.0, more bark than bite. I would say it's a question that we ask. We don't believe that the threat is completely gone, and we would, of course, never encourage anyone to take the threats of 25% tariffs on Canada lightly. But what we seem to be seeing this week from the news flow, and of course, I don't think that we've learned that much, but we're starting to see maybe a pattern here that maybe the tariff threats are truly more a tool to bring people to the negotiating table, try to get better deals for the U.S. and the tail risk of just Trump putting tariffs on everyone and then seeing the impact and having to deal with that after. Maybe this scenario is getting less and less likely. And this is what the markets also seem to be thinking here. If we look at this week's markets at the close on Thursday, interest rates still a bit higher on the year and on the week, so negative returns for bonds. But for equities, TSX up 3% after 3 weeks to the year, 4% on the S&P 500, the NASDAQ 4% higher, EFI up 3%, emerging markets 0.4%. So markets is pretty, positive at the beginning of the year. Oil prices are higher. The Canadian dollar has been pretty volatile, but as of right now, we're pretty much at the same spot where we started the year. Euro is up a little bit, and gold is up 5% since the beginning of the year. So it's the market that is taking news in stride, and maybe, as I said, the tail risk is getting priced out from this market. So market is calling the bluff from Donald Trump. So here, what I propose this week is that we focus maybe on the headlines of the week. So I'll go in somewhat a chronological order here. If I start on the left, on Monday, Inauguration Day, the big news during the day was that Donald Trump didn't really mention the tariffs on Canada, and until early evening, he had not made any mention of them at all. So maybe we had dodged the bullet, and then when he was in the Oval Office in front of journalists, someone asked him about the tariffs and said, well, yes, we think we'll do it, and on February 1st. So the question everyone was asking is, why February 1st? Why not now? And on Monday, there was a memorandum that was sent by Donald Trump to all of the federal agencies to evaluate all of the trade relationships between the U.S. and other countries, see if there were any malpractices, if there was structural trade deficits that they could address with different tools, and he asked for a report on April 1st. So these are the facts. So on April 1st, there will be this study. We still think that Canada is a good trade partner to the U.S. The relationship makes a lot of sense for the U.S. Where if you remove oil and gas exports from Canada, we actually import more from the U.S. than they import from us, and we're about 1/10 of the population. So that means per capita, every Canadian imports 10 times more from the U.S. than they import from us. So there's a few of these economic arguments that can be made, but can we reach Donald Trump, and can our politicians and diplomats talk to the right person to make sure that we bring the message that it's in the U.S. interest to keep this relationship active? Well, that's the game that's being played right now behind the scenes. But Donald Trump is still saying things like that the U.S. doesn't need Canadian energy or cars. Energy, well, they do need it, because in the Midwest, the refiners, they're using oil coming straight from the pipelines from Alberta. They're refining heavy crude, and you can substitute heavy crude for light crude. And if you want to substitute away from Canadian oil, you would need likely Saudi Arabian oil, which comes from a boat, and then it needs to go through rail. So it's you can substitute in the short run. So they do also need Canadian oil. But where we are right now, we're starting to feel that likely this is all a strategy to get concessions from Canada. Donald Trump likes a win. Remember that he's the one who negotiated the USMCA, which took effect during his first term, and then it was the greatest trade deal ever, and it was, of course, the most supported trade deal ever in the history of the US in terms of the votes in Congress. So it's a good deal for the US. Now he wants maybe to force an early renegotiation. That was part of the memorandum that he issued on Monday. So I would say the strategy for Canada could be to say, yes, let's renegotiate right away. Maybe we'll make a few concessions, but if that allows us to avoid the threat of tariffs, and maybe then if the focus of Donald Trump moves away from us and on other things, then we would be good. There would remove some uncertainty, and this uncertainty that we're seeing now, and until we do renegotiate the trade deal, well, that means that investments are not being made, hires are not being made, because we don't know the rules of the game for the next few years. So I would say that there's maybe an interesting strategy here for Canada to just say, yes, let's renegotiate right away. What do you want? And just work on that trade deal. Trump is also starting to soften his stance on China. I know on the campaign trail he was talking about 60% tariffs on China day one. I mean, it's been a week, we haven't seen tariffs, and Trump is now saying that he would rather not put tariffs on China. He met with Xi Jinping. He says that he's a great guy and all of this, and he would rather not put those tariffs on China, but he maintains the threat. So again, this is a softening of the tone. So that again, the tail risk of tariffs on everyone and consequences be damned, we seem to be seeing a downplay on these, and the odds of this tail risk scenario are fading. The last point, Donald Trump also asked for lower interest rates, wants to pressure Jerome Powell, the Fed of the chair, into doing that. Well, you can't do that. It's not allowed by the law. You cannot remove a Fed chair and put someone that's going to be friendlier in place. So that's something that can be done. So next week we have a decision by the Fed. Of course, we'll have all of these questions asked to Jerome Powell, but we don't think that Donald Trump can actually do something like this. Of course, he could put pressure on Powell, and the markets can start to speculate, and rates could move around that. But it's not like Donald Trump now is the de facto Fed chair. That's not how it works. So very busy first week with rhetorics, with messages that can be contradictory here, but it seems like we haven't learned much, but we can decipher through this that the tariff threats are real. We need to take them seriously, but the tail risk of just putting tariffs on everyone and then forcing concessions from trade partners seems to be getting lower here, and it's more likely that this is just Trump being the negotiator that he loves to be. So again, we'll follow that week to week, but we learned if we learn a few things this week, I think it's those things. So what we'll be watching next week, the Bank of Canada rate decision. Consensus is expecting a cut. Markets expecting a cut. We're expecting a cut. So this is what should happen next week, 25 basis points. Fed rate decision, no change is expected. Conference board, consumer confidence should be higher. Core PC inflation, the favorite measure from the Fed, should be a bit higher month over month, but not out of line with the Fed's annual target of 2%. Year over year should be sticky at 2.8%, so no progress there. So I think the highlight of the week will be on Wednesday when the Fed decides. The decision comes at 2 p.m. and the press conference from Jerome Powell starts at 2:30. That's going to be the highlight of the week. So that wraps it up for the week. Always a pleasure to serve you. If you appreciate the content here, please share, and of course come back again next week.